This report is based on publicly available information from reputable outlets as of January 30th, 2026 at 3 p.m. Eastern Standard Time. Some details may change as new facts emerge. On Friday morning, January 30th, 2026, President Donald Trump made one of the most consequential economic decisions of his second term. In a post on Truth Social, the president announced his nomination of Kevin Warsh to become the next chairman of the Federal Reserve System, ending months of speculation and a highly publicized search that captivated Wall Street and Washington alike. This is not just another cabinet appointment. The Federal Reserve Chair is arguably the most powerful unelected economic official in the world, wielding enormous influence over interest rates, inflation, employment, and the financial stability of not just the United States, but the entire global economy. According to Trump's announcement, he has known Kevin for a long period of time and has no doubt that Warsh will go down as one of the great Fed chairmen, maybe the best. The president added that Warsh is, quote, central casting and that he will never let America down. But here's where this story gets truly fascinating and why every American needs to pay attention. This nomination comes at one of the most turbulent moments in Federal Reserve history. The current Fed chair, Jerome Powell, is under criminal investigation by the Department of Justice. Republican senators are threatening to block any Fed nominee. And questions about the central bank's independence from political pressure have never been more urgent. In this analysis, I'm going to break down exactly who Kevin Warsh is, why Trump chose him over other candidates, what this means for your mortgage rates and retirement savings, and the major political obstacles that could derail this nomination before it even gets started. Let's dive in. The announcement came just after 7 a.m. Eastern Time on Friday. According to reports from CNBC and NBC News, Trump met with Warsh in the Oval Office on Thursday and offered him the position. The 55-year-old former Fed governor accepted, setting in motion a confirmation process that promises to be anything but smooth. This decision culminates a process that officially began last summer but started much earlier than that, with Trump launching what many observers have called a fusillade of criticism against the Powell-led Fed almost since Powell took the job in 2018. The selection process was led by Treasury Secretary Scott Bessent. According to reports, the short list at one point included 11 candidates, an array spanning past and present Fed officials, leading economists, and a few Wall Street investment professionals. That field was winnowed down to 5, then 4 finalists. Those finalists included current Fed Governor Christopher Waller, BlackRock's fixed income chief Rick Rieder, National Economic Council Director Kevin Hassett, and Warsh himself. As recently as Thursday afternoon, according to CNBC reporting, Rick Rieder was thought to be the favorite. Rieder congratulated Warsh on the nomination, stating, quote, "This has been an incredible honor for me. I congratulate Kevin on his nomination and think he will serve the institution and our nation very well." Trump also addressed the speculation about Kevin Hassett, saying in a separate Truth Social post that Hassett is doing such an outstanding job working with me and my team at the White House that I just didn't want to let him go. Hassett himself told CNBC that he was not disappointed. Quote, "I've got my dream job," Hassett said. "I think President Trump made a great choice." If confirmed by the Senate, Warsh would take over the position in May when Jerome Powell's term as chair expires. Importantly, Warsh will fill the Board of Governors position currently held by Governor Stephen Moran, whose term expires on Saturday. Moran can continue to serve until a replacement is named. This is a critical detail because it determines how Warsh enters the Fed's governing structure. Senator Tim Scott, the Republican from South Carolina who chairs the Senate Banking Committee, praised Warsh's nomination. Scott stated that Warsh has, quote, "deep knowledge of markets and monetary policy that will be essential in this role." He added that the Federal Reserve's decisions touch every American household, from mortgage rates to retirement savings. And President Trump has been clear that bringing accountability and credibility to the Federal Reserve is a priority. So who exactly is Kevin Warsh? To understand why this nomination matters, you need to understand the man himself. Kevin Maxwell Warsh was born on April 13, 1970 in Albany, New York, to a Jewish family. He was raised in nearby Loudonville, New York, and graduated from Shaker High School in Latham. According to his own accounts, he credits his upbringing in upstate New York for teaching him much of what he needed to know about the real economy. He received a Bachelor of Arts in Public Policy from Stanford University in 1992, with a concentration in economics and political science. He later earned his law degree from Harvard. After law school, Warsh went to work on Wall Street at Morgan Stanley, where he spent nearly 7 years in mergers and acquisitions, advising companies in critical sectors such as manufacturing and technology. In 2002, Warsh joined President George W. Bush's administration, where he worked as a special assistant to the President for Economic Policy and served as Executive Secretary of the White House National Economic Council. His primary areas of responsibility included domestic finance, banking and securities regulatory policy, and consumer protection. President Bush nominated Warsh to the Federal Reserve Board of Governors on January 27, 2006. At 35 years old, Warsh became the youngest appointment in the history of the Federal Reserve. His nomination drew some criticism at the time based on his age and inexperience. Former Fed Vice Chairman and Reagan appointee Preston Martin said Warsh's nomination was, quote, not a good idea, and that if he had a voice in the Senate, he would vote no. Despite these concerns, Warsh was confirmed and took office on February 24, 2006. And then came the test that would define his tenure, the 2008 financial crisis. According to former Fed Chairman Ben Bernanke's memoir, Warsh was, quote, one of my closest advisors and confidants during that period. Bernanke wrote that Warsh's political and market savvy and many contacts on Wall Street would prove invaluable. According to author David Wessel, Warsh established himself as the chairman's protector in Republican circles and Bernanke's bridge to Wall Street chief executives. Bernanke would later write that Don Cohn, my vice chairman, and Kevin Warsh were my most frequent companions on the endless conference calls through which we shaped our crisis-fighting strategy. During the crisis, Warsh tried to engineer mergers between Citigroup and Goldman Sachs and between Wachovia and Goldman Sachs. These efforts failed. On September 20, 2008, he was granted a waiver to deal with his former employer, Morgan Stanley. The next day, Morgan Stanley was converted into a bank holding company in order to access Federal Reserve loans, in effect saving the firm. According to the Wall Street Journal, Timothy Geithner, president of the Federal Reserve Bank of New York, and Kevin Warsh worked in New York to sort out the details with Goldman and Morgan Stanley. The Journal's editors summarized, quote, Mr. Warsh was part of former Fed Chairman Ben Bernanke's inner circle during the worst of the panic. Having worked at Morgan Stanley, he provided crucial insight into the real condition of Wall Street, and well before the panic, he told his Fed colleagues that the financial system was vastly undercapitalized. Warsh resigned from the Fed in March 2011. Since then, he has worked as a visiting fellow in economics at Stanford University's Hoover Institution, a scholar and lecturer at the Stanford Graduate School of Business, and has served on various advisory bodies including the Group of 30 and the Panel of Economic Advisors of the Congressional Budget Office. His wife, Jane Lauder, is a granddaughter and heiress of Estee Lauder and a longtime employee of the family cosmetics business. Now let's examine the different perspectives on this nomination because opinion is sharply divided. Starting with supporters of the nomination. The Financial Services Forum, which represents the 8 largest U.S. banks, endorsed Warsh on Friday morning. Amanda Eversole, the forum's CEO, said, quote, the Federal Reserve is critical to ensuring the economic success of our nation. Kevin Warsh is the right man for the job of chair. Warsh brings an unmatched wealth of experience and has a proven track record of guiding our nation's economy through financial crisis and recovery. President Trump understands the need for strong leadership at the Federal Reserve to fulfill its dual mandate while modernizing the institution. Mohamed El-Arian, chief economic advisor at Allianz and one of the most respected voices in global finance, said in a post on X, quote, I believe he brings a strong mix of deep expertise, broad experience, and sharp communication skills. His commitment to reforming and modernizing the Fed bodes well for enhancing policy effectiveness and protecting the institution's political independence. Chevron CEO Mike Wirth said the country faces an, quote, inflection point, pointing to rising power demand from artificial intelligence, energy security concerns, and shifting global geopolitics. Wirth stated, quote, having known Kevin Warsh for decades, he's uniquely prepared in judgment, experience, and temperament to serve our country at this critical time. Hedge fund billionaire Stan Druckenmiller, who has a close relationship with both Warsh and Treasury Secretary Scott Bessent, told the Financial Times he is highly supportive of Trump's pick. David Bahnsen, chief investment officer of the Bahnsen Group, said on CNBC's Squawk Box, quote, he has the respect and credibility of the financial markets. There was no person who was going to get this job who wasn't going to be cutting rates in the short term. However, I believe longer term he will be a credible candidate. Now let's turn to the critics. Senator Elizabeth Warren, the Democrat from Massachusetts, issued a scathing statement. Warren said, quote, Donald Trump said anybody who disagrees with him will never be Fed chairman. Former Fed Governor Kevin Warsh, who cared more about helping Wall Street after the 2008 crash than millions of unemployed Americans, has apparently passed the loyalty test. She continued, quote, this nomination is the latest step in Trump's attempt to seize control of the Fed and follows the Trump administration's weaponization of the Department of Justice to open criminal investigations into Fed Governor Lisa Cook and sitting Fed Chair Jerome Powell. No Republican purporting to care about Fed independence should agree to move forward with this nomination until Trump drops his witch hunts of the current chairman of the Federal Reserve and Governor Lisa Cook. Senator Mark Warner, the Virginia Democrat, said in a statement, quote, it is difficult to trust that any chair of the Federal Reserve selected by this president will be able to act with the independence required of the position. He added that this administration will levy charges against any leader who makes interest rate decisions based on facts and the needs of our economy rather than Trump's personal preferences. Some independent analysts have raised concerns about Warsh's policy history. According to Renaissance Macro Research, quote, Kevin Warsh has been a monetary policy hawk his entire career, and most importantly, during a time when the labor markets fell out of bed. His dovishness today stems from convenience. The president risks getting duped. Bloomberg's chief U.S. economist Anna Wong said, quote, I read the FOMC transcripts during the global financial crisis. His quotes scared me. She was referring to Warsh's statements during the crisis warning about inflation risks, even as unemployment was rising. Martin Muleson, a former International Monetary Fund Chief of Staff and now a non-resident senior fellow at the Atlantic Council, offered a more nuanced view. He noted that Warsh, quote, brings real credentials and understands the institution's machinery and the weight of its decisions. However, Martin added, quote, critics will recall that Warsh urged premature tightening after the financial crisis, a view that, in hindsight, could have slowed recovery. Let's analyze what this means for the economy, the markets, and your personal finances. This is where things get really interesting, and where the contradictions in Warsh's policy positions come into sharp focus. For most of his public career, Warsh has been considered what economists call a hawk on monetary policy. That means he was generally in favor of higher interest rates, focused more on keeping inflation in check than on making money cheaper to fuel economic activity. In September 2008, the month when Lehman Brothers collapsed, Warsh said, quote, I'm still not ready to relinquish my concerns on the inflation front. 7 months later, when the Fed's preferred inflation measure was at just 0.8% and the jobless rate at 9%, he said, quote, I continue to be more worried about upside risks to inflation than downside risks. Many observers have argued that Warsh's hawkishness during that period, had it been adopted as policy, could have exacerbated the crisis. Over the years, he frequently warned of inflation that didn't materialize, even as the unemployment rate hovered near 10%. From this perspective, according to analysts, his approach would likely have resulted in higher unemployment, slower recoveries, and greater deflation risk during the 2010s. But here's where it gets complicated. Since emerging as a possible successor for Powell, Warsh has changed his tune. He told CNBC in July, quote, "The Fed's hesitancy to cut rates, I think, is actually quite a mark against them." He has called for, quote, "regime change in the conduct of policy at the Fed," and has been harshly critical of the current leadership. In an April lecture hosted by the Group of 30, Warsh said, quote, "The Fed's current wounds are largely self-inflicted." He has also called for a, quote, "new Treasury-Fed accord," like we did in 1951 after another period where we built up our nation's debt and we were stuck with a central bank that was working at cross purposes with the Treasury. For the markets, the reaction has been mixed. Treasury yields were little changed on Friday immediately following the announcement, a sign investors saw little immediate risk to inflation or the Fed's independence. The dollar edged higher against major peers. Stock losses were mild and contained, suggesting relief that Trump's pick was viewed as a steady hand rather than a political pawn. Gold prices, however, plunged nearly 5.7% to trade around $5,136 an ounce. Silver was down over 10%, settling around $103 an ounce. According to Evercore ISY's Krishna Guha, quote, "The Warsh pick should help stabilize the dollar some and reduce, though not eliminate, the asymmetric risk of deep extended dollar weakness by challenging debasement trades, which is also why gold and silver are sharply lower." For ordinary Americans, the implications depend on which version of Warsh shows up. If Trump thinks Warsh will be able to just push through aggressive rate cuts with ease, he might be in for an unpleasant surprise, according to CNBC analysis. While the Fed chair serves as the public face of the central bank, interest rates are set by a 12-member committee consisting of the 7 Fed governors and a rotating group of regional Fed bank presidents. In recent months, the committee has been divided over whether interest rates should be lower to cushion possible job losses or higher to curb stubborn inflation. Markets don't expect much action from the new chair. Traders are pricing in at most 2 more cuts this year before the benchmark Fed funds rate lands around 3%, which policymakers have indicated is the long-run neutral rate. Now we need to discuss the elephant in the room, the political obstacles that could derail this nomination. Within hours of Trump's announcement, Senator Tom Tillis, a Republican from North Carolina, announced he will oppose the nomination. This is a major problem for the White House. Tillis sits on the Senate Banking, Housing, and Urban Affairs Committee, which has 13 Republicans and 11 Democrats. The refusal of a single Republican on that panel to vote for a presidential nominee sets up a stalemate that could leave Warsh's nomination without a recommendation of approval by the full Senate. In his statement, Tillis said, quote, "Kevin Warsh is a qualified nominee with a deep understanding of monetary policy. However, the Department of Justice continues to pursue a criminal investigation into Chairman Jerome Powell based on committee testimony that no reasonable person could construe as possessing criminal intent." Tillis continued, quote, "My position has not changed. I will oppose the confirmation of any Federal Reserve nominee, including for the position of chairman, until the DOJ's inquiry into Chairman Powell is fully and transparently resolved. Protecting the independence of the Federal Reserve from political interference or legal intimidation is non-negotiable." Tillis is not alone. Senator Lisa Murkowski of Alaska has also vowed to oppose anyone the president nominates to the role, while the Justice Department is conducting its criminal probe. When asked on Thursday if the Senate could confirm a Fed pick without Tillis, Senate Majority Leader John Thune responded, quote, "Probably not." This brings us to the extraordinary situation with Jerome Powell. On January 11, 2026, Powell revealed in a video statement that the Department of Justice had served the Federal Reserve with grand jury subpoenas, threatening a criminal indictment related to his testimony before the Senate Banking Committee last June. That testimony concerned the multi-year project to renovate historic Federal Reserve office buildings, a project that has seen costs balloon to approximately $2.5 billion. Powell called the investigation a direct result of the Fed's refusal to follow the preferences of the president on interest rates. Quote, "This new threat is not about my testimony last June," or about the renovation of the Federal Reserve buildings, Powell said. It is not about Congress's oversight role. Those are pretexts. The threat of criminal charges is a consequence of the Federal Reserve setting interest rates based on our best assessment of what will serve the public, rather than following the preferences of the president. The Trump administration has denied any improper motive. National Economic Council Director Kevin Warsh told CNBC that the DOJ issue, quote, could get resolved quickly. The White House is highly confident that Kevin Warsh is a great nominee and that he should be confirmed as soon as possible, and every single resource we have at our disposal is behind him and behind that outcome. So what happens next? There are several critical developments to watch in the coming days and weeks. First, the confirmation process. Warsh will face hearings before the Senate Banking Committee. Given the split on the committee and Tillis' stated opposition, the path to confirmation is uncertain. To get a nominee to the Senate floor without approval from the Banking Committee, supporters would need 60 votes in the Senate to proceed, a threshold that seems difficult to reach given current partisan divisions. Second, the DOJ investigation into Powell. Senator Tillis has made clear that his opposition is directly tied to this investigation. If the Justice Department resolves the inquiry, either by dropping it or concluding it, Tillis has indicated he would lift his holds on Fed nominees. As Tillis told reporters, quote, DOJ's got to decide when I lift those holds. It gets lifted the day that case is adjudicated or withdrawn. Third, what Jerome Powell does next. Powell's term as Fed chair expires in May, but his term as a member of the Board of Governors runs through January 2028. He has repeatedly refused to answer questions on whether he will step down from the board after his chairmanship ends. Chairs have historically resigned from the Fed after stepping down, but Powell's staying would create a procedural complication for Trump. If Powell remains, it would deprive the president of the ability to add another appointee to the board. This is why some analysts suggest Powell may choose to stay on as a governor, in effect blocking Trump from stacking the board with his preferred nominees. Fourth, the Lisa Cook case. Trump has also tried to fire Fed Governor Lisa Cook over allegations of misstating information on a mortgage application, charges Cook denies. The Supreme Court heard oral argument in the case last week and has ruled that Cook can remain on the Fed's governing board for now while her lawsuit seeking to reverse the firing proceeds. Under federal law, members of the Fed board can only be fired for cause. The outcome of this case could have significant implications for Fed independence and Trump's ability to reshape the central bank. Markets have reacted relatively calmly, viewing Warsh as a credible choice with real experience. But the political battle is just beginning. The coming weeks will test whether the Trump administration can navigate the confirmation process, whether the DOJ investigation will be resolved, and whether Kevin Warsh can bridge his historically hawkish views with the president's demands for dramatically lower rates. What happens at the Federal Reserve affects every single American. It affects your mortgage, your car loan, your credit card rates, your job security, and your retirement savings. This is a story that will continue to develop, and I'll be following it closely. If you found this analysis valuable, make sure to subscribe and hit that notification bell so you don't miss any updates on this developing story. Leave a comment below telling me what you think about this nomination. Should Kevin Warsh be confirmed? Is the Fed's independence truly at risk? I want to hear your thoughts. This has been your comprehensive breakdown of one of the most significant economic appointments of the Trump administration. Thank you for watching, and I'll see you in the next one. Fifth, the economic data. The Fed this week left its benchmark interest rate unchanged at 3.5 to 3.75% after 3 consecutive cuts towards the end of 2025. Trump said on Thursday that the rate should be 2 to 3 percentage points lower. Such low nominal rates have historically tended to accompany periods of weak or slowing economic activity. However, the economy grew at a 4.4% annualized rate in the third quarter of 2025, according to the Commerce Department. That could rise as high as 5.4% in the fourth quarter, according to the Atlanta Fed. These are not weak numbers. Inflation, while down significantly from its 2022 peak, remains above the Fed's 2% target. Producer prices rose 0.5% in December, higher than expected. These data points will heavily influence how Warsh, if confirmed, approaches his first months in office. To summarize what we've covered today, President Trump has nominated Kevin Warsh, a former Federal Reserve governor with deep experience in the 2008 financial crisis, to succeed Jerome Powell as Fed chair. Warsh faces a complicated confirmation process with at least two Republican senators, Tom Tillis and Lisa Murkowski, vowing to block any nominee until the DOJ investigation into Powell is resolved. The nomination comes at a pivotal moment for the Fed, with questions about central bank independence, persistent inflation, and economic uncertainty creating a challenging environment for any new leader.